It is February 9th, 2024, and we are back with Lindsay from Searchlight Lending to provide an update on ADU financing and how things have changed since we last got together and talked about it, which was just about 2 years ago. Lindsay is a licensed mortgage broker and prefab builder. She brings great home and construction knowledge to the table, passionate about helping solve our housing issues and helping people attain home ownership and increasing their equity. And so, Lindsay, I'm going to pass the screen to you, and you can walk us through kind of what's new and different in ADU financing for 2024.
Thank you, Scott. Absolutely. Yeah. A lot has changed. Rates have certainly gone up, but they've also come back down. And I always tell my clients to play the long game. And, as a mortgage officer, I want my clients for life. So I'm monitoring that. And, you got to pivot and segue in this world.
Yeah.
All in all, a lot has changed. The good news is lots of new products and albeit rates are higher, so that's hurting some people as purchase power and abilities and such, but there's definitely some products out there that are new and exciting, and rules have changed. So financing your ADU, it all really begins with a lot of conversation, and it's all about what you want to do, and as well qualifying for that new financing that you may need, and discussing with a mortgage officer as to what kind of financing you may need. A lot of people refinance their primary mortgages into that low 2s and 3% range, and don't want to touch that, and rightly so. So let's dive into some options, and what might be out there in terms of building your ADU, and depending on how you might be building your ADU will play into that as well. So, like I said, a lot of financing options are available, and not every loan fits every borrower. It's really important to have that conversation and talk to your mortgage officer. If you're self-employed, you have a unique income stream, maybe some sort of ding on your credit. But what is really good is there are a lot more options today than ever before, and things are ever changing. So, if there are not the product you're looking for, lenders are looking at this. We're really at the tip of the iceberg in terms of ADU building, and so I do feel like financing will change as we go forward. Um, as I said, most people don't want to touch their primary mortgage, and rightly so. So my next kind of thought or idea is, can we look at a HELOC or a HELoan? And HELOC or HELoan is a secondary mortgage product that is behind your primary. So your primary does not get touched, it stays in place, and there's a secondary new loan amount behind the first. And what is important is, can you qualify for that new larger loan amount on top of the existing? A HELOC is an adjustable rate. There all different lenders have a proprietary HELOC or HELoan. And so it's important to be able to shop for these, and that's what an independent mortgage officer can do. HELOCs are adjustable. There's usually a draw time. They're usually interest only, whereas a HELoan is a fixed rate and you receive all the funds in one lump sum at closing. If there is not enough existing equity in the home, then we want to pivot to a construction loan. And again, those are also proprietary. So a lot of different products out there and a lot of different ways to qualify. Um, like I said, rates have been high. They have come down almost a point since, their very, very top mark. And we're all hopeful that maybe we'll see some further rate drops, maybe by the middle of this year, but there is no crystal ball. The HELOCs and the HELoans are based upon prime rate, and prime right now is at 8.5. You should always expect with a secondary mortgage product that your rate will be higher than a first. So, what is important again is having this initial conversation and making sure that you will qualify. If you need this financing, will you be able to get it? And so you need to have that conversation, whether you're ready to build yet or not. That is part of that preliminary discussion, is finding out, do you qualify for that new larger loan amount? And a lot of these HELOCs and HELOANs, again, do require the same type of documentation as would a primary residence, like a purchase or a refinance, where you're showing all of your income documentation, tax returns, pay stubs, all of that stuff. If you don't necessarily qualify in that conventional manner, we can certainly look at out of the box solutions. And there are lenders out there that offer secondary mortgage products in that unique way. So, again, when to start is right away. And knowing you can get that financing is important. And then working with your mortgage officer as you get closer and closer to being build ready and potentially needing financing when you're done as well, because you will have a new larger loan amount or a value of your home. And if rates drop at that point, you may want to think about refinancing. So, a little bit about the loan process and what to expect, whether you're going to do a refinance, a HELOC, or a HELOAN, a construction loan. The minimum you should be anticipating is 21 to 30 days. A construction loan is going to take longer than that, but plan on that in terms of the timeline for the actual loan process. Uh, for when you're pulling cash out of your property, you do need to have an appraisal. So that will be part of the process, and it's not something that you necessarily have to coordinate. It's coordinated with your mortgage officer and the lender, but just anticipate that that will have to happen. And so we always want to err on that conservative side of what that value is of your home. I always want to be pleasantly surprised. And if the appraiser comes in and gives you a higher valuation, then things get to be adjusted at that point. But we certainly don't want the opposite, where we think, oh, my home is worth a lot more than what that appraiser thinks. And then the loan gets adjusted, and that can be it can blow up the loan and or really put a ding on pricing. So that's important. Um, and again, working with an independent mortgage officer will give you, the most options and very likely the best pricing. We're independent. We don't have a bottom line. We have a bottom line. We are not working for a one certain bank or lender. So we're really want our customer is our client, and we really want to shop for you. And another thing to notice or to note is that the HELOCs, the HELOANs, refinances give you the full autonomy of utilizing those funds how you want to with your project. If you're doing a construction loan, you will be in between your lender and your contractor. Your contractor wants to get paid upon milestones. Your lender has, there's a draw schedule. And usually that goes very smoothly, but it can get a little bit tenuous. And the funds are sitting in an escrow account as well. So they're not something that you just have full access to. So again, with construction loans, they are an interim primary mortgage that lets you lean on the as completed value. So if you cannot do a HELOC or a HELOAN because there's not enough existing equity, then we look at that construction loan. There are many different construction loans out there. There are one-time close that segue from a construction loan into primary, like regular financing or takeout financing. And there are those that are just a construction loan, and then we do separate takeout financing. Or potentially you've got a plan to not have any financing once you build. It really depends on your scenario. Um, like I said, when you are doing a construction loan, though, there is a draw schedule and it is based upon milestones. So there is this system in place for a construction loan that is something that everyone has to kind of comply with. Um,
It's sort of
and
managed a little bit.
exactly,
Yeah.
yeah, absolutely managed. And again, you as the borrower do not have the full autonomy of utilizing those funds how you want. There are some safeguards to that for sure, just in terms of making sure that your contractor is meeting certain milestones. There's also an inspector, though, that of course is going to help you, make sure that contractors meeting milestones. So sometimes it depends again on how you're building. A lot of people do ask me about private money, which certainly we have access to and is can be very helpful for certain investors and such. But for the average homeowner, for their primary residence, it's very rare that you're going to be using private money. Rates will be higher, and there can be less hassle, but it's really going to be about what that property is generating in income and such. So there's definitely a middle ground. If you have been told before that you don't qualify conventionally, then there's a kind of a world of non-QM or non-conventional, and that is where we can try to help borrowers that again might be self-employed or have a unique income stream qualify for that loan rather than go conventional. So private money is great for certain circumstances, but for ADUs, it really is, unless you're an investor and building several, and certainly can do that and am doing that. But for your average homeowner, I'd say it does not necessarily apply.
Right.
So yeah, like I said earlier, ADUs are certainly all the rage. I'm talking to many people daily about them, and we are truly at the tip of the iceberg. And only recently have there been some new loan products. For example, there is this new Reno Choice program that Freddie Mac is offering, where you can buy a home and get the funds to build your ADU, or you can refinance and get the funds to build your ADU all in one lump sum. Now that it is a primary mortgage, but that's a super exciting new program that just unrolled recently, and I think more will come. Um, but I I sometimes work with people for, years before they're ready to actually begin their project.
Right.
So I totally get that timeline. Start with conversation, understand what your options are, know what your purchase power is, what you can do, and don't take it on yourself is my recommendation. I think most people are pretty busy, and unless you really want to do this, there's so many great ADU companies out there that take you from I want to build an ADU to I'm ready to build my ADU and I have built my ADU. And I think that goes a long way. It's very undervalued, that pre-construction of getting you permit ready, plan ready, and ready to build. It can be a lot. And that said, always have a contingency. There are what could possibly go wrong in construction. It's not an exact science, and just there's always things that come up. So and with if you ever do a construction loan, there will be a contingency built into that as well. So a lot of people ask me where the market is going. I always like to say as anyone knows, no one has a crystal ball. But even the Fed recently announced that they do hope to have rates kind of starting to go down, as they already have, but maybe even more substantially so by the middle of the year. So again, you play that long game. A general rule is if you can save 0.5% or more on your interest rate, it usually makes sense to refinance.
Hmm.
And so if you refinance now and you're not happy with the rate, well, hey, well, we're going to monitor your mortgage and maybe we can refinance again down that line. But building an ADU is really going to get that return on investment. I'm seeing it all the time. And I'm really seeing that, it's helping people with just home ownership. There are new laws now, like AB 1033, which we can chat about, that
Hmm.
is really going to generate more home ownership and more housing. Can
That's great. Thank you, Lindsay.
Thank you, Scott.
Yeah.
Yeah.
So I had some questions. Does owner occupancy matter for the different types of financing you typically see?
100%.
Yeah.
Yeah, that's almost my first question is this your primary residence? There are many protections around it being a primary residence, and so the type of mortgage product and, things are, uh, not always necessarily limited, but there's definitely, different ways, that and different loan products, if it's an investment property, it's a different story for sure.
Right. Right. Yeah. And that's the kind of thing we see. The sort of the early birds in the ADU specific lending, Redwood Credit Union and Napa's affordable forgivable ADU loan. Both of those are construction loans. They're owner occupied required. There are a fair number of restrictions on those kinds of funds being construction loans themselves. They are managed. There are points that allow the funds to be released, but it's not like a HELOC or a HELOAN that has the greater flexibility. I know we've had homeowners come to us with questions about, well, can I use some of this money for XYZ? And typically it's not for just the construction of that ADU. No, those funds can't be used for that. So they're some people may be looking at sort of a blend of financing to make, you know, their ultimate project work out.
Yes, actually, I recently received an email from a lender about ADU financing for the pre-construction
Yeah.
process. But it's certainly, if you can, it will help in the long run if you can fund that pre-construction process. But yeah. So again, it comes down to that conversation and, like, this is what I need. This is, and then I get to work in helping you find the right financing.
And I think that's, it's a critical first step for a lot of homeowners. Something that we talk about a lot with homeowners who contact us is, your budget kind of determines your project. And so understanding your budget first will save you a lot of time in figuring out what your project can be.
Yeah.
Because there's no point in spending a lot of time going, okay, I'm going to do 1,000 square feet and it's going to be 2 stories when you don't have the budget for that kind of project. And maybe you need to be looking at 600 square feet, 1 story. And so working on budget early, again, it doesn't need the ADU plans to be done, because it's more based on the appraisal value of the existing house, income, and things like that. That you can kind of help understand your budget and then find a project that fits within that budget that also meets your
Absolutely,
goals.
yeah. And if people are wondering, like, oh, but that's a bit like chicken and egg kind of
Yeah,
thing, like, I don't know how much I'm budgeting, so how much do I need kind of thing. Well, let's come up with a figure. Let's figure out what you can be pre-approved for. Let me give you good news, like, hey, I can pre-approve you for a loan of $500,000. You don't have to necessarily use that, but at least you've got that in it. Like, okay, now I can start talking. And from what I'm seeing, a rough budgetary figure for a ground up ADU, budget 250 to 300. So
yeah,
300K. So, if you have that knowledge, well, I can get a loan for up to 500 and my ADU is going to cost about 300. Okay, well, hey, we're on the right track then. And you know that this is doable. And then you can start taking those next steps and you feel confident taking those next steps. The last thing you want to do, I can't tell you how many times I've had clients both in my construction world and financing world where just gone too far and they've like created a set of plans and they're all ready to
yep,
build, and then they're like, oh, I can't afford this,
yeah,
and they've spent like tens of thousands of dollars in pre-construction and they can't do it.
yeah,
That
and
that's not fun.
yeah, we that's something that at the ADU Center we really try and prevent that, to try and give them a framework of, here not only here's the all the steps of the project and the rules around your property, but here are the likely costs, and to understand, we it doesn't happen as often as it did in 2020, but there are still some folks who think, oh, I can build an ADU for 25 grand in my backyard, and it's like that's not not going to work that way. Unfortunately, I wish it was. It would make everything much easier. But the costs are, as you said, 250 to 300K is kind of your buy-in price for a detached ADU of almost any size. Um, and depending on your jurisdiction, depending on your hillside slope, and all those other site issues. But having that understanding and having a budget in mind, yeah, I think it's going to save them a ton of time, save them money, from going down a path that isn't going to be viable long term. So this is great, and it is really interesting to see. When we opened our doors in 2020, there were no ADU projects, products for financing, um, and now we're seeing more and more, and the FHA change that happened in October of last year of allowing providing ADU specific financing options. I think that's a really big shift,
Huge.
because yeah, they set guidelines for everybody, and having that now be on their radar means I think we're going to see a lot more. We're already seeing more options for financing because of that
Yes.
policy change.
And the ability of using the income that an ADU generates now, before I did touch on that, is was not necessarily usable, and it
Right.
is now. So yeah, lots of changes happening, and they continue to, and that too, with the way that we're building.
Yeah.
5, 6, 7 years ago, you talked to lenders about building in a modular way or a prefab way, and it was like no way. And now that's changing too. So,
Yeah,
um,
everything I think is we're moving in the right direction. Interest rates and you know, from what we've seen, construction costs have kind of plateaued in 2022, 2023, and they're starting to come down a little bit, but it's fairly flat in terms of over time. And the interest rates are now back up to historical average, but they're starting to come down a little bit too. So I think this is from a financing perspective, from a numbers perspective, I think this is a fairly stable time to look at budgets and cost of the money and figure out what's going to make sense for your individual ADU solution. Um, I don't feel like we're, other than more products coming out. I don't feel like there's a lot of turmoil in what the numbers are going to be like this month versus 3 months from now. They're likely to get a little bit better 3 months from now, but probably not enough to wait for 3 or 6 months. It's cost of construction typically go up over time, so kind of strike that balance of getting the financing now, getting the project started. The sooner it's done, the sooner it can start generating income.
absolutely.
And if
Mhm.
if interest rates come down, you can refinance it later.
Yeah.
Yeah,
Yeah. And let's just talk about all the benefits too of how creating more housing, more infill,
yeah.
which it sounds such an ugly word for something that is so great. I mean, we've got
Uh-huh.
all this extra space, and like when I fly over our country, and I just you just see so much of us, and it's like we've got all this space to kind of keep natural spaces natural, and we don't need to be living on top of one another. We also this is not what ADUs are about, and it's about and creating more home ownership. And there are these two new, SB9 and AB 1033, where if you AB 1033 is if you build an ADU, you have the ability to create a condo. It is no longer an ADU, it is now a condo, but you can share a property with a family member. There's a lot of I don't know if we're going to be chatting about SB9 and 1033 today. Maybe that's the topic of a different webinar, but because it's a lot to discuss. But that's again, it's just all of it points of things moving in the right direction, which is really exciting.
Yeah, agreed. 1033, we've been calling it the condoization law, which is about as bad of a phrase as infill. I wish we had a better phrase for it. But that's something to definitely watch. That's new, and cities have to opt into it to decide to allow for it. And so
Mm.
far, from what we've talked to, most of the cities they're not ruling it out, but they're just basically, it's like we're not going to deal with it until we have to. And so, yeah, it's definitely a conversation we should have in more in depth. There's a lot of interesting possibilities there, but it's a month old, month and a half old at this point, and no one really knows how it's going to play out yet. But that's something that I can see that, particularly from also from a finance perspective. refinancing on a condo project is different than refinancing on an ADU project.
Absolutely.
And
Hmm.
particularly
Yeah.
for multi-generational housing where you've got, adult children or aging parents in the ADU slash condo, they can build equity, they can get traditional financing. There's a lot of benefits there. And you can build your ADU and then condoize it later. It doesn't have to be done at time of construction. So that could be something that opens up as a possibility in the future for people as well. So you're right. I think there have been a lot of changes since we last spoke about this in 2020, December of 2021, and I think that there's some really interesting things happening now that are just making things better.
Absolutely. Absolutely. Yeah. I'm excited.
Right.
Cool.
All right. Well, thank you for the check-in, and I'm sure we'll be talking to you more shortly about all these other things we get to talk about, 1033, and I want to get you back here to talk about modular and SIPs and some of the things we've seen in that part of the world for ADUs because I think there's a lot of interesting developments going on there as
Yeah,
well.
I can't wait. Yeah, we'll get that going really soon. Just there is a better and greener way of building, and it's like why yeah, it's a game changer. So
Yeah.
that's the next one for sure. Thank
Awesome.
you.
Thank you, Lindsay.